I know there's a lot going on in the economy right now, and particularly the stock market. One thing I've realized is yes, stock market drops are real, right? 1000%. There's many reasons for them, but they don't worry me. And you'll see why today. If anything, they excite me. In journalism, right? No matter if money or not, but particularly money, if it bleeds, it reads. And, they know that they get more clicks and more views, right, when that happens. And so if anybody doesn't know what's going on in the stock market right now, it hit like a all-time low since 2020, and people are freaking out. There's different speculations on why, and so my message today is going to be related to that, but more so just going to shift your perspective and really educate you on not just what's going on right now, but more so what to expect in the stock market and how to manage it. And when I say stock market, I also mean economy too as well, because usually how the stock market is doing is a kind of a direct reflection of how the economy is doing in totality. When I first started learning about finances, 8-9 years ago, my mind immediately went to, I need to learn the stock market, which most people's mind goes. When they think finances, it's one of the first things they think. And so I just educated myself a ton. I read every single book you could possibly think on investing in the stock market from unbiased parties mostly, and then just absolutely grilled my financial advisor with all the questions I had. I just learned a lot, and through that learning, it helped decrease a whole bunch of stress and anxiety, right? When it comes to the economy, when it comes to money, when it comes to the stock market. And if anything, it really, really increased a lot of opportunities. When I study the greats in finances, Warren Buffett, Tony Robbins, Ray Dalio, Robert Kiyosaki, these are common themes between what they teach, right? And that the majority of mistakes people make with their finances are when we make emotionally charged decisions, especially around the stock market, right? Fear is the biggest emotion that leads people to making mistakes in the stock market, right? And so when COVID hit, so many people lost so much money, not because the stock market dropped, but because they panicked and they pulled their money out. They thought the world was gonna end. And so when you pull your money out of the stock market, which you'll see here in a second, when it's down, you lock yourself into that loss, right? So let's just say for easy numbers, somebody had $100,000 in the stock market during COVID and it dropped to 70K, right? When you pull your money out, you lock yourself into that $30,000 loss, right? Because they operated off of fear. But if you don't pull the money out, you let it ride out, it will bounce back. Right? It will bounce back. The only way you lose money in the stock market is when you pull money out. And my point is saying that is that's a huge mistake that people make, right? If there's no objective, clear reason why to pull your money out when the market is down, right? And you're just doing it based off of fear, that's where you'll make your biggest mistakes, right? So the stock market doesn't always go up. It doesn't look like this. It's not just a straight line that every year it goes up, every day it's going up. And sometimes, it drops a ton. But over the long haul, it quote unquote wins. Here's the S&P 500, right? It's basically an index fund. We'll get into it a different day, maybe today, but it represents basically very closely the rise and fall of the stock market. So if you can look at the max that they'll allow you to go back, it allows you to go back to, only the year 2000. Even though the stock market existed before that, the trend would be the same. What you can see here is that, back in the year 2000, right, the S&P 500 was trading at a price of $135. And so if you fast forward now 24 years, what's the S&P 500 trading for? About $550. Yeah, it rose a ton over these past 24 years. But look what happened in between. You see all these peaks and valleys, right? Where if I zoom in, let's just go into, the past 1 year, right? So you can kind of see the peaks and valleys a little bit, right? Goes up, right? Comes back down a little bit, goes back up, recovers, comes back down a little bit, recovers, and then continues to go up, right? Continues to go up, will come down a little bit, right? So this is just a visual depiction to prove my point that the stock market doesn't always go up, but over the long haul, it always wins, right? So if you study the stock market, there's some very fascinating facts, right? And so over the past 75 plus years of the stock market, it is a proven fact that every 3 to 5 years, we will experience a bear market. This means that the market has dropped by 20% or more. So for me, when I see this, right, and we're in a bear market right now, and when was the last one? COVID, right? If you remember, this is the lowest the stock market's been since COVID. When was COVID? 2020? What's the year now? 2024? So does that fall into what we could have expected? Every 3 to 5 years is actually right dead in the middle, 4 years, right? So for me, when I'm hearing all this noise in the stock market, oh, it's dropping, it's the lowest it's ever been since COVID. It's like, cool, I was expecting that to happen. We're at the 4-year mark. But the only time you lose money in the stock market is when you pull the money out. Right? If you ride the bad or the bear market out, it will recover. Let's just say this past April, right? The S&P 500 was at 518 and it dropped to 495, right? So the only way that you actually lose that money, what it dropped by, so it dropped from 518 to 495, so just say $7, just for small increments here. The only time that you actually lose that $7 is when you sell. If you're like, oh shoot, it's going down, right? And like, I gotta sell this, and you sell it, you lock yourself into that loss, right? It's the only time you actually lose money in the stock market. Like on paper, electronically, you may lose money temporarily, right? But if you don't sell and you ride it out, guess what happens? It recovers. And after every winter comes spring, right? Remember that in the stock market. After every winter comes spring. Because over the past 75 years, every time there has been a bear market, right, which means it's dropped by 20% or more, every single time it has almost been immediately followed by a bull market. Every single time over the past 75 years when there has been a bear market, it has been followed every single time by a bull market, which means it has recovered or more, right? So during COVID, Meta stock drops, right? There's nothing wrong with the company of Meta itself, right? It's just there's things happening in the world that people were freaking out about. Right. And so point being is when the market drops, and you'll see why it goes up and down here in a second, some of the best companies in the world are on clearance. Right. And so imagine like you went to the mall right now and you saw a Louis Vuitton purse that was normally $2,000. Right. And it's on sale for $200. Are you going to buy it? Probably. Right. Especially if it's guaranteed that in a year you could sell it for the $2,000. Would you buy it then? And so point being is there's nothing wrong with these companies most times. Right? Like stocks, let me clarify this first. Stocks are just ownerships in companies. When you buy stock, you're buying ownerships in companies in the form of shares, right? So I have a bunch of ownership in Meta. I'm not saying go buy it. We can talk about it in the back end, right? But I have a bunch of shares in Meta, right? And so I am an owner in Meta. That's what stocks are. You buy ownerships in companies through shares. When the stock market drops, right? Like again, most times it doesn't have anything to do with those companies, right? And we'll get to that here in a second, right? So when COVID hit, Lauren and I took almost every one of our extra dollars and we invested it into the stock market, right? When everyone else is pulling their money and hiding underneath their bed with their money and like, hiding the money in the drawers, right? And taking money out of the banks, right? Freaking out, which again, it was a crazy time. I'm not, making anybody feel stupid for that, right? But we were like, we're going to be okay. The world's going to be okay, right? And things are going to bounce back. And so we bought a bunch of stocks, right, during COVID. And so let's just say we bought the S&P 500, right, during COVID for $257. Look what it's worth now, right? $550. So we more than doubled our money. So let's just say we put, for easy numbers, $20,000 in the stock market during COVID, right? Right now it's worth almost $50,000. Right, so in 4 years, we made $30,000 on our money by doing nothing. We invested the money and let it sit there, let the economy, let the world bounce back, right? And we basically doubled, almost tripled our money, right? And so that's just to prove my point here is that like the financially savvy do not look at a bear market as a problem, right? When the market drops, that's not a problem for the financially savvy. Instead, it's an amazing opportunity, right? Because the best companies in the world are on clearance. Right. And Warren Buffett's number one financial advice is he says, look to buy amazing companies at a decent price, right? Not decent companies at an amazing price, right? I didn't say one single thing about Apple, Amazon, Tesla, Meta being bad, right? Nothing of those companies are going wrong, right? But because of those things scaring people, provoking fear in them, right? They want more cash reserves. Right? And so what they'll do is they'll sell their stocks in exchange for their cash back. Right? So they no longer own ownership in those companies. Right? They're willing to get rid of that because they're fearful about what's happening in the world and they would rather have cash on hand for doomsday. Right? And so when you do that, the demand for stocks goes down and so does the price. Right? It has everything to do with something going on in the world that is dictating people's decisions, either fear-based or strategically, that force them or make them decide to sell. And when they sell, the demand goes down and the value goes up. right? Here, you know, in a couple of months, you know, when the market starts to bounce back, you're going to see a lot of people putting their money back in the market, right? Because the market's bouncing back and now they're buying again. And guess what? Demand's going back up, supply's going back down, right? And what happens? The price goes back up, right? That's what happens, you know, right? As soon as everybody chilled out after COVID, right? It took a couple of months, but people started, okay, I'm gonna take my money out from my mattress. I'm gonna put it back in the stock market, right? And so they start buying again. Demand goes up, supplies for the stock goes down, and look where the price went back up to. This was literally 5 months after COVID hit, right? Just a massive drop, right, during COVID. And only 5 months later, not only did it recover to its past highest high, but it went to a massive new high, right, afterwards. And that's because people were like, okay, maybe I overreacted a little bit. Maybe I shouldn't have taken all my money out, right? Maybe the world's not coming to an end. Right? Maybe I should go put my money back in the market, right? But again, the thing to take away from this is the stock market is great, but I truthfully believe your guys' resources are best spent in ramping up your business right now to increase your income, to increase the profit that you have left over, to then give us more funds to go buy other assets like stocks and bonds.